The Nasdaq has dropped markedly as investors sour on technology stocks. If there's one thing that investors really don't like, it's uncertainty. Right now, a host of factors ranging from new tariffs, geopolitical unrest in the Middle East and Europe, economic indicators such as jobless claims, and even some murmurings of stagflation have made investors uneasy. After soaring to record highs over the last 2 years, the Nasdaq Composite has turned southward, and megacap tech stocks have sold off in epic fashion. In just the last month, artificial intelligence, AI, darling Nvidia, has lost roughly $600 billion in market value following a 16% drop in its share price. Could more drops be in store for Nvidia, or is now a lucrative opportunity to take advantage of the market slump and buy the dip? Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. Check our Patreon on the description below for an inside members-only access on what are the best buys now. We will also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you will never miss out. The direction in which a share price moves and the underlying business fundamentals for a specific business are not always correlated. Although shares of Nvidia have been sliding for several weeks now, the financial profile below shows a pretty compelling picture, one that underscores the demand for Nvidia's products and services are in demand, and the company is able to fulfill this demand at a highly profitable rate. One good way to assess what Nvidia's future could look like is to pay attention to the moves of its customers. Some of Nvidia's largest clients include cloud hyperscalers Microsoft, Alphabet, and Amazon, as well as another Magnificent Seven member, Meta Platforms. Each of these companies recently reported earnings for the full calendar year 2024. During their respective earnings calls, investors learned that these AI behemoths are gearing up to spend north of $320 billion on AI infrastructure at the high end of their guidance this year. Considering that competition in the data center GPU market is still limited, I think it's highly likely that Nvidia will benefit greatly from rising capital expenditures among its largest existing customers. In the past year, there has been a lot of excitement around Nvidia's next-generation GPU architecture, known as Blackwell. That anticipation has finally paid off. Blackwell has officially launched, and its early performance has exceeded expectations. In the fourth quarter alone, Blackwell-related revenue reached $11 billion, surpassing Nvidia's internal projections, according to Chief Financial Officer Colette Kress. While Blackwell is expected to drive strong growth in the near future, Nvidia is already looking ahead. Just days ago, CEO Jensen Huang spoke at the company's major GTC conference. Along with showcasing Blackwell, he also introduced upcoming GPU architectures named Blackwell Ultra, Rubin, and Rubin Ultra. These will roll out over the next couple of years and represent continued improvements to Nvidia's already industry-leading hardware. Recent spending plans for major tech companies suggest that artificial intelligence remains a top focus. That momentum supports Nvidia's strategy to invest even more in research and development, pushing innovation forward at a rapid pace. Nvidia's price-to-earnings ratio, or PE ratio, is currently around 40. This places the stock near its most affordable valuation on a PE basis in the past 5 years. The rise of artificial intelligence has played a major role in reshaping Nvidia's business. What started primarily as a gaming-focused company has now evolved into a leader powering a wide range of AI-driven applications for some of the largest companies in the world. Although recent declines in the stock price might suggest negative sentiment, the underlying trends tell a different story. Nvidia's long-term outlook remains strong. At today's valuation, the stock appears to be trading at a discount when compared to its historical levels, making this dip a compelling opportunity for long-term investors. Give us a like if you like our video, subscribe, and ring the bell to never miss out. Check our Patreon for an inside look on what are the best buy and sell stocks every week.